some of this can be easily explained, as we have heard, by the COVID outbreaks that happened in the month of August. And, China has a zero tolerance policy that has aggressive testing, contract tracing, as well as stay-at-home orders that's going to obviously impact output for factories, but also domestic consumption. So I think in the short term, that's how I would look at this. But over the long term, I think you raise a point. The economy is certainly slowing. And so the real question will be, what does this final quarter of 2021 looks like? And I think we should be prepared for less growth and for slowing. Now, to your earlier point about what China will do about it, look, the People's Bank of China has made it very clear that they're not going to adjust the way that they've been managing the economy. So there won't be any real stimulus juice to the broad economy, but there will be some targeted things that we see, a relending program that they announced earlier this week to try and get local banks to loan to small and medium-sized enterprises. That's the buzz phrase here, small and medium-sized enterprises who've been hard hit by the pandemic and slow to recover, Seema.
If the economy continues to decelerate, do you think this could change China's sort of recent efforts around regulatory crackdown and other restrictions that the government has been putting in place?
I think those things are fairly locked. I think China's playing a long game here, and they're not going to allow for a quarter or two of tightening to really change what their long-term trajectory is. Some of the announcements that we're seeing is very clearly China saying, we have a model that we're comfortable at least trying, and we're going to push forward. We're having less and less trust of what our access to Western capital markets will be. And so a lot of this stuff China is looking to do for China, and we'll see how it goes.
You heard our earlier report there from Eunice Yoon, launching 2 different stock trading platforms. What does that tell you about how the Chinese are thinking about financial markets, the efforts to localize it while at the same time encourage foreign investment? Your thoughts there?
I really, really believe that China believes that capital markets at home are not as mature as they can be and should be given the external political environment. And so all of this trends towards China trying to do more for China. And they want a lot of foreign investors to put their money into China, not in New York or London. So we'll see how it goes. But this is what I think they're thinking.
Back to regulation, the biggest names in China, from Alibaba to Baidu, are sitting well off their 52-week highs. I think it's like 25 to 30%, right? Just a massive sell-off in these Chinese tech giants. What's your outlook?
Well, I have said frequently that I would still wait to see what's going to happen in this sector before I jump in. I know there's been a lot of talk about the bottom and should you cash in. I think, look, what China has signaled here is that common prosperity, along with busting up monopolies, is a long-term effort. We're just seeing the beginnings of this. Every week there's something new. And so if I'm an international investor, I'm still sitting still to see where this is going to ultimately end. And I just don't think we know enough at the moment.